All right, thank you, everyone, and really appreciate that we're at the very end of our day in the sense of the speaking portions. We have gratefully gotten Acting Superintendent Kaitlin Asrow to close with a fireside chat. Assistant Dean Michael Rand from GW Law School has kindly offered to moderate, so I welcome them both on stage. I want to thank all of you. We do have a roundtable on capital markets risk mitigation framework after this, so please hang out if you are interested in attending that roundtable. But for now, we have a very important discussion and hopefully an update on the latest from DFS. Thank you for coming from New York. Bye.
So welcome. It's my privilege to host here Acting Superintendent of the New York State Department of Financial Services, Kaitlin Asrow. It's a long title, so I'll stick to Kaitlin from here on out. Welcome to Washington, D.C. I know it's not your first time here. You spent a number of years with the Bank of San Francisco, Board of Governors with the Federal Reserve System. And so you've had a rather unique path to this current role. And so I'm hoping that maybe you can share a little bit from your perspective of time at DFS, a research and innovation division, and overseeing the virtual currency framework, how that has sort of informed your role as you step into your new role as acting superintendent and shaping the priorities for DFS.
Yeah, thank you, Michael, and GBBC and GW. It's always wonderful to kind of be in an academic setting, feeling back at home here. So as you said, I've been fortunate to work across financial services, looking at kind of its impact on consumers and innovation from a lot of different vantage points. Actually started overseas in international development, thinking about introducing financial products to new markets. As you said, kind of went into also consulting, where I was advising early stage fintechs on their development and thinking about, again, consumer protection and the regulatory framework there. Spent time at the Federal Reserve in supervision, but also leading their innovation work, thinking about how do we coordinate across the banks, across our other prudential regulators at the federal level, and then leading research and innovation since early 2022, I think has given me obviously the deep vantage into virtual currency. And it was a privilege to step into this role, and I'm going to continue those focuses. So going to continue kind of those themes that have been throughout my career on the consumer side and the innovation side. I think the virtual currency market has the benefit of kind of me knowing the space so deeply for the last 4 years and continuing that focus as acting superintendent. But in addition to crypto, right, I'm going to focus on cybersecurity, third-party risk, AI, of course. And then, above it all, I really want to think about, continuity and stability for the department and the market, and then the staff at DFS, who, are consumers too and going through a lot of these changes.
So when people think about sort of responsible innovation, New York has been a leader in this. One of the first things that comes to mind is BitLicense. And now New York has had more than a decade of experience in this area, supervising virtual currency activity. And DFS has also taken initiatives through its Volt program as well to improve areas related to process, transparency, and operational efficiency. So what are some of the updates that you'd like to share with the folks gathered here and online? And where do you see that next phase of modernization going in digital space?
Yeah. So, of course, and I'm sure we'll talk a lot about Genius and the implementation of that, right? A lot of conversation about stablecoins in this market. But the first thing I want to highlight is that the BitLicense is so much more than that, right? The virtual currency market is so much more than that. And our licensing framework reflects that, right? It's flexible. It's really about that business activity. So if you're in payments, if you're in exchange, if you're in custody, B2B, B2C, like we can cover all of that. And you can stretch into novel areas through our framework in a responsible way that is really under a regulatory scheme that, as you said, has a lot of that history. And the BitLicense continues to be of interest to a lot of companies coming up and setting up shop in New York. We just issued 2 BitLicenses last month, large players, MasterCard, Galaxy One. So we're continuing that pipeline, and it is strong. And I will say, the Volt initiative is something that I led for 4 years. And I'm really excited about the changes we made. You know, the BIT license didn't have a great reputation in terms of speed and efficiencies when I started in 2022, and we put a lot of work into our applications process, into the efficiency side without losing rigor. You know, and I think we've also done a lot of work on actually new systems to iterate on policy. Because this space is novel, we're introduced to new policy concepts all the time. A good example of this is through our material change system. So an entity comes in, it has one business model, but in virtual currency, right, that's going to change, and you're going to need to introduce new products to the market. And so we have a process for that to actually iterate on, wow, this is novel. How are we going to address that? What are the guardrails we need in place? We obviously have now a very robust process for stablecoin issuance, right? The gating, the reviews of that, and then just our overall supervisory uplift, how we do exams, how we do ongoing monitoring. So next phase is just continuing to build on that. Right now we have the foundation. I want to keep going on that efficiencies, the gains without losing the rigor. And then on top of that now, you know, expanding my aperture to all of DFS. You know, I've always thought about kind of, you know, putting our oxygen mask on first in innovation, meaning we need to introduce technologies ourselves within DFS. So we're doing a lot of that right now with, for example, a rollout of what is called DFS ID. Amazing, but a single sign-on experience, which we should have had, but now we have of a regulator, right? No matter if you're an insurance company, a mortgage broker, a crypto company, you can come in, there's one portal, right, through all of your filings that you need to do with us. We're also introducing workflows, right? Your exam, it's not back and forth over email, right? There's a system we're loading everything into. So that's our next phase of transformation.
So I'm glad that you mentioned that, because you know, New York has really been at the center of innovation in this space at the state level, and we now recently have the passage of the Genius Act, or semi-recently. We have some movement on the passage of some sort of digital market infrastructure with the Clarity Act, and that's really changed in some sense the dynamic now that there's more federal oversight and statutory implementation between the balance of both the state and the federal side. And so I'm wondering how you think about that relationship evolving, and as those federal frameworks become more important, how that affects the work that DFS does and how you think about market regulation.
Yeah. You know, as you've noted, you know, we've been doing this for a long time, especially in kind of crypto time, right? We are the old kids on the block, as I like to say, and I think that is an example of the value of states being involved in oversight in the financial services space. Of course, it's there in the dual banking system. And you know, we believe the intent of Genius is to create that for the virtual currency market so that we can continue to move fast. And that's what we're committed to doing. And I will say, you know, we were there at the ground level at the what is now, you know, the federal requirements. And we've always said, right, there needs to be a federal baseline, right? We wanted the same protections that New Yorkers have been afforded if there's a DPEG, if there's volatility in the market. You know, I was there in 2022. Myself and my team, the team under me, implemented the first guidance on stablecoin issuers, right? We were there thinking about, is it T+2, T+3, what are we doing here? How do we think about that reserve mix? How do we think about, you know, all those components in terms of security? We were there talking to the federal legislature, providing them technical assistance on what was the foundation of Genius with those legislators at that time. Of course, now this has, you know, opened the aperture. Now that Genius has passed, a lot more uptake, a lot more uptake and activity. So we're keeping pace with that. And we continue to have interest in the New York path. So that means, right, our issuers, some, yes, have gone to the federal framework, but many have stayed with us. Many are taking both paths to understand kind of how that's going to be structured in their businesses. And I will say, as I look towards this, right, my commitment is continuing to keep pace, figuring out in a really expeditious way how we're going to passport really cleanly between states, right? If you come into New York, that's an efficient jump into other locations. We are looking at the Treasury rules and the OCC rules like everyone else. We find them very, very prescriptive. That's not necessarily what we feel is the intent, to kind of have a principles-based floor that states can iterate on top of. That being said, just this morning we released regulations to make sure we are substantively similar. And really what this does is nothing new for us. It codifies in a very precise way what we've already implemented through our guidance and our supervisory agreements, which were enforceable. But now it's very clear kind of externally in regulation, our stablecoin guidance, as well as the additional kind of detailed requirements from Genius. So that regulation is out. We welcome comment, but again, this is just making sure that our stablecoin issuers in New York are stable. They don't have any question about the New York pathway, and then new entrants coming in have that optionality, which again, I think is the intent of like the dual crypto framework that we're entering into. And again, the value, going back to where I started, the value of states is, we have early mover advantage. We can move quickly coming from the Federal Reserve and working with the other federal banking regulators. I can speak to that personally, my ability to kind of work unilaterally, pass a regulation when I need to pass a regulation. And we have unique skills that we've built over 10 years, dedicated people who know the technology and are passionate about the technology, who are sitting in DFS and are there on the other side to iterate on your business. And of course, we know our consumers and our communities, and that's always been the value of states.
So I'm glad you mentioned that, because it sort of draws on what is a very deep wealth and history of the expertise that New York State has built over the years. There was the 2022 changes to the UCC. New York City has its own initiative on digital assets and blockchain. And one of the elements that you identified last year since taking over the role is basically maintaining New York's position, its preeminence in financial infrastructure and a technology hub. So can you talk about a little bit more about firms that are building, expanding, returning to New York, and then how you see this in terms of actual trends and applications, licensing, those sorts of issues?
Yeah, I mean, it's the right time to talk about New York pride right now. And so, we are, the financial capital of the world. We have the best talent. We have the best regulator and the best sports team. So I think, we've got it covered. And we see companies, of course, coming to New York to continue to build, to continue to grow. And we want to be part of that. And we know that in addition to having that talent pool, that market, right, that's very active with partners, with opportunities, and, again, a supportive regulator, we have a supportive kind of political structure as well. So you mentioned kind of UCC amendments, making it easier to kind of navigate the space in New York. Their New York City office who's focused on this as well. So a lot of conversation and a lot of opportunity for this space to flourish in New York. And, we're excited to be part of that. And again, my goal is, this hub that we've built in New York for virtual currency, how can I expand that out? We've already engaged really heavily, as I mentioned, kind of at the federal level in the implementation and building of these frameworks. We've engaged very heavily with the other states that have stood up frameworks, advising them from a technical perspective. And again, my goal is to take the next step and say, okay, we have similar frameworks. How can we make sure that a company can really operate in both states with a very light touch, that we're confident in each other's regime? And then I can expand that to the international level as well, insofar as we have been actively having conversations with international regulators since my time in 2022 and saying it's a global market, right? How are we looking at an issuance of a stablecoin in your jurisdiction versus my jurisdiction? How do we think about the safety of our consumers? And so that's my other hope, right? A business in New York has an opportunity in London and has an opportunity in other spaces. And we recently announced an MOU with the EBA, the European Banking Authority, for example, and that's just one of many, which is allowing us to coordinate very carefully with the Europeans. We also launched with my team the Transatlantic Regulatory Exchange, which was actually sending one of our stablecoin experts to the Bank of England. They sent one of theirs, and we actually worked together on their framework, our framework, and kind of now we have that direct line. And so it's been really interesting to go from like kind of formal meetings to just, you pick up the phone and you call your colleague at the Bank of England who you worked with and had an exchange with. So we're now implementing the second one of those, exchanging staff with an international regulator. We've hosted international kind of stablecoin forums with other international regulators where we talk about novel issues, and we're, again, hosting the second one of those. So continuing to focus on, why New York is a hub and how we can continue that for businesses.
I think that's incredibly important because it emphasizes sort of the global nature of that project, and also sort of aligns with the need to work with partners and develop those relationships across borders. So related to that, just this past month, you issued new guidance that covers cybersecurity related risks for regulated entities. This is something that any DFS regulated entities are going to have to pay very close attention to. That again emphasizes that global reach and framework. So and I want to make sure I get this right. So you said each entity should assess their unique circumstances and operations to identify which steps are warranted. And I'm wondering if you can talk a little bit more about that. So I know within the framework, there's sort of three core pillars. You have improving detection and readiness, reducing attack surfaces, and strengthening resilience and response. And so if you can walk us through, one, what's prompted this guidance, why now, and why do you think it was important to issue this now, and talk a little bit about the implementation of that.
Yeah. So as I said, cybersecurity is top of mind when I'm asked, what keeps me up at night. Definitely, this is, at the top of the list. What prompted it to start is, there has been a series since I joined in 2022, a series of very intensive global conflicts that have, increased the threat and attack surface and kind of nation-state actors, others taking advantage of this environment. So we've been kind of pinging our entities each time this happens, and we kind of took a step back and said, this, and then of course with Mythos and the conversation about AI and that increase in the risk. So we want to put something together that's more comprehensive, that can be referred back to, and that we can iterate on as that changes. But the one thing to be clear on, we have Part 500 for those who aren't familiar, which again is a really unique aspect of New York regulation, because we have cybersecurity specific regulations that overlay every single one of our entities. So this is applicable again from crypto down to check cashers. How are we making sure that we keep New Yorkers safe from those cybersecurity threats and our entities and that overall stability? So this does not introduce new requirements on Part 500. This is really, building on that, and my goal was actionable guidance. Each one of our entities, as the kind of quote you noted, is different in terms of, a small local brick and mortar entity in Queens is going to be different than, my MasterCard that just got their BIT license. And so how do I make sure that I have guidance in this increased threat environment from global conflict and new AI models that a CISO can pick up and really start actioning? So that was the goal. As you said, reducing attack surface, improving threat detection and response, and then improving overall resiliency are the pillars that can be dug into. In addition to the overall guidance, we issued targeted advisories to our entities that dig a little bit more into, in particular, frontier AI models and where those threats are. And I think that's very timely, given, I think today or last night, right? Anthropic just released, the kind of public version.
Just today, I got the
notification. Just today,
yeah.
I know. So, we are making sure to keep close tabs on that, and we really want to iterate with these entities. So, and, we know the next version of the model will be available soon as well.
Can you expand a little bit more on that? So when you're thinking about integration with an ecosystem, you have, third-party service providers, custody, and specifically as it relates to the blockchain. Can you talk more about how a firm should think about accountability within that framework? Obviously, there's a lot of moving parts. Interoperability is a big theme here that we've talked about, and how firms should think about that and going forward, and particularly from DFS's viewpoint.
Yeah, coming from an innovation background, like third parties, the interconnectedness of financial services has been fascinating to me from the beginning, right? The kind of the expectation of fintech, and a lot of this innovation was, partner, sell, go public, right? What is that? But, I think that partnership pipeline has always been very strong and increasingly so. And then just the dependence of financial services firms to partner to keep pace with innovation and kind of mitigate all of these threats that we have before us, keep pace with the larger kind of market environment. So we know third parties are essential. We know the interconnected nature is essential. That being said, it's not new to anybody. You cannot outsource your ultimate responsibility as a regulated institution. So the buck always stops with you. But we want to make sure we're with you and kind of supporting, entities in that journey and what we expect. So, the first guidance I issued when I stepped into this role last year was on kind of the risk of third parties in the cyberspace. Basically, again, you can't outsource your ultimate responsibility. So how do you navigate this if you have security risk kind of originating in a downstream entity that you are outsourced to? But that applies across your engagement, not just the cybersecurity risk, but your broader compliance risk, your consumer risks that you have there. You need to think about it. And so again, my expectation is you have a very proactive, risk-based approach that you are constantly adapting when you think about outsourcing any of your functions. And the other key piece is making sure you are really looking across the entire life cycle of a third party. So that starts with, I have a concept for something I want to outsource to, I have a wind down plan to offboard an entity that's not working, and everything in between. So, initial identification, vetting, onboarding, ongoing management, like each one of those needs to, again, be proactive, risk-based, and adapting to our changing environment.
So your prior comment about Mythos is actually, I think, quite timely for this, because this is a developing area when you think about sort of the opportunities that AI enables in terms of fraud detection otherwise. And again, New York State has been an incredible innovator in this space in terms of firms. And can you talk a little bit more about the opportunities that AI poses for this, but then also some of the risks that need to be mitigated in terms of the regulatory framework around the same?
Yeah, I think, these are, such heavy overlaps, and, I've been focused on AI again throughout my career, and, we see that, the last few years and then the last few months have just been this, exponential increase in the speed, and now the adoption across everywhere, and everyone is becoming very bullish on it. So been thinking a lot about, AI specifically, the intersection of AI and blockchain, and intersection of AI and everything that we could weave together and imagine from the use cases that we've really seen our entities to deploy. And so, kind of taking a step back, I'll share a little bit, at least kind of the tactical approach we're taking to AI, which is a lot of what I did at the Federal Reserve and then for the last 4 years in R&I, which is first kind of have a dedicated innovation team that's embedded, that is just researching this, right? That is our team that's researching this from our lens, embedding into supervisory teams, helping think about those novel policy issues, because an examiner doesn't have time to kind of step back from their exam and say, what are the risks of AI, right? Like you really have to have people who are dedicated to that. And then we, as I mentioned in some of our work of using technology ourselves, so I implemented the first AI use policy for DFS. We have kind of a statewide one, but we've customized it. We made it specific to kind of our sensitive data, our sensitive environments, given our position as a regulator. So we have a governance committee, we have paths to do that. And we have our first, I think, 3 approved use cases now that we're rolling out across DFS. So we're very excited about that. And we'll see where it goes. But, we're focusing on kind of all AI applications right now.
So I know everybody has sort of a focus on recent introduction of AI. I'm going to shift gears a little bit, which is that we have several fast-moving areas, and that's not just going to be AI or agentic tools. We have tokenization, stablecoins, DeFi, prediction markets, crypto trading, tokenized assets, a lot of change to the financial system in a way that we probably haven't seen in some amount of time. And so what I would say is, from your perspective, from DFS's perspective, which of those areas is most in need of forward-looking guidance? Because there's sort of a lot of fires in a lot of different places. And what sort of advice would you give to early innovators in this space as indications that they're able and willing to scale responsibly?
Yeah. I will say, my first commitment, which I mentioned, is, the companies that have invested in New York that are our regulated entities, that's my commitment. And that's why, out of the gate right now, focused on stablecoins, substantively similar, and making sure there's that clear path. Beyond that, I'm really open. There's a lot of areas that are within our jurisdiction and also not within our jurisdiction. So navigating that, But really, I need to hear from communities like this on, what are the hard policy issues, engaging with stakeholders from the consumer side, from our legislature on where do we need to move from a policy perspective. So I will say, next guidance, welcome feedback on that. We have an amazing program that I stood up kind of called DFS Exchange, where we have early stage innovators coming in. So I will say, my guidance to them is come in, right? Come in early, and often we've set that up to be outside of the supervisory system, to be well outside of the enforcement system. This is just, for us to learn from you. And I think I've had the privilege in my career of kind of seeing regulators, shift that mentality towards having these spaces for innovators to have a dialogue. So I don't think there's an excuse now to say, well, you don't understand me, and we don't have the same language, and what are you going to do to me, right? Like, we have spaces to come in and communicate. So I think that's the first threshold for an innovator.
Yeah, I mean, that sandbox environment and that honest and open conversation is really important. So imagine, fast forward a year from now, we're sitting down here again, we're having this conversation. Under your leadership, what does success for DFS look like? And if you can talk a little bit more about that. And then in particular, going back to the comments that you made, at the very start in October, maintaining New York's leadership in the financial sector and furthering that mission.
Yeah, I mean, we've had a lot of conversation about change, and you said like we're at this moment that it feels like it must be an inflection of how much volatility we have, positive volatility and negative volatility. So success for me in a year is actually stability. So I think that these are not binary, right? I can be an innovative regulator, and I can be really steady at the helm and give that confidence to the market and to our entities and to our consumers in New York. So, success for me is, a strong and resilient DFS, strong and resilient staff who are ready to kind of supervise and implement.
Awesome. I think that's a great way to end it. Thank you for sitting down with us. We appreciate it greatly, and looking forward to what next year has.
Yeah, thank you for having me.
Thank you.